What is going on, everybody? TG here, back again. It has been a while since we have done one of these videos. I have been moving and it has been very, very stressful, but we finally moved in. We finally got things set up. We don't even have Wi-Fi yet. We're using a personal hotspot. That's a TG loyalty that we do to bring you guys videos every single day. But yeah, we moved into the new place in Florida. Trying to make the most of it right now. But I made the riskiest bet of my life today in Amazon. If you would go ahead and look, as you guys know, I'm a huge Amazon bull. I love Amazon. I sold all of my shares. Now, what I did with this was something a little risky. I went ahead and bought a Leaps call on Amazon. Now, one Leaps call cost $46,000. So, the reason I chose to do this, because I thought about it a lot last night. I really went over everything and decided that buying a Leaps call, in my opinion, would be the smartest, most beneficial factor rather than buying the 28 and a half shares that I had. So with 28 and a half shares, I'm using about $90,000. With this, I'm using about $46,000. But here's the catch. If we go ahead and look at the Greeks, because the Greeks for options are very important, we go ahead, we're losing, a little bit a day. We're losing, I think, $5.59 a day on this option for Theta. So not a decent amount, not a ton, but obviously it's still something. But the delta, 58 delta, that is the equivalent of owning 58 shares of Amazon. Now, 58 shares is obviously a lot more than 28 shares, significantly, over double the amount. So when Amazon does go up, we're going to profit a lot more. As you can see, this option went up 0.1% today, and we went ahead and made $560. So that is one thing. Another thing is how you can make money off of this call. Now, we want to write covered calls, right? Well, we can't because we don't have 100 shares. This Leaps call acts as 100 shares of Amazon because it is in the money. It is sitting at 3,100 while Amazon's at 3,118 right now. So it's technically in the money, which means we could go ahead and sell covered calls on Amazon and use it as basically a hedge for our position. Now, this is a great way to make some good passive income. I'm not going to be writing any because I think holiday earnings are going to be through the roof. An article came out today saying that online spending totaled up to 188 billion, and I'm assuming that Amazon got a good chunk of that revenue from online. Amazon's the biggest e-commerce play. And Amazon Prime, everyone, why would they use something else when they have Amazon Prime and can get 2-day free shipping? So I bet a lot of people used Amazon. I also think another thing that grew big was their AWS, which has been continuing to grow. They're getting a lot of new clients. I also think ad revenue is going to be a big driving factor of this company, especially for profit margins, which is one of the biggest things that Amazon struggles with is profit margins. That's the great thing about AWS and ad revenue. That is their highest profit margins. And AWS actually brings in the highest profit margins of anything in the company, over 50%, which is amazing. Now, we go ahead and look at these earnings that are coming up. Estimates of about 119 billion. Okay, they did 96 billion last quarter. So I'm assuming that we have Cyber Monday, Black Friday. We also have Prime Day. Okay, and Prime Day was estimated to be a couple billion itself, almost 10 billion right there. And then we obviously have the Christmas shopping. So we have 4 really, really big catalysts for these extreme spendings. And I think Amazon took a big market share, especially away from other retailers. Amazon Prime, the amazing thing about it is that once you have it, you are more likely to spend on Amazon than another retailer. If you're paying a subscription of $12 a month, you are more inclined to spend money on that software rather than go to another product. And that's why I really think Amazon is going to continue to deliver. And I think they're going to beat these earnings pretty big. I'm very excited to see these earnings. February 4th is when these earnings come out. And I think it's going to be big. I think it's going to be a big, big beat. Now, I also want to show you guys something on Amazon stock because Amazon stock has been trading very bad, for the past 6 months. It's literally in 6 months has done the exact same thing as it has. It hasn't done anything in so long. And I think that's one of the big reasons we're going to see, a huge surge very soon. So we look at July 10th all the way to today, it's lost money in those months. It's been stagnant. It's been building up. It's had 2 consecutive earnings beats. I think we're going to see 3 also potential stock split. I'm a big advocate. I think that Amazon definitely needs to stock split if they want to continue to blow up. And I think that they're going to do that. And I think when they do that, this stock is going to absolutely explode. Like I said, it's been sitting in that channel for a very, very long time. And I think that it's going to explode very, very soon. I also want to show you guys something about this Leaps option. So like I said, it costs $46,000 to buy. Okay, it's a lot of money. Especially my buying power is 273 because it's a little different with shares. With shares, I can buy 100,000 worth of shares, but I can't buy 100,000 worth of options. That's the big difference. I can only buy about half of that. So after thinking about it for a while, I was like, you know what, this could be a good option because I can sell calls on this to make money. And if Amazon does start to run, which I do believe it will, I'm going to make a lot more. We go ahead and here and look at the options calculator for this particular call that I have. We can see how much we can really make. So let's say earnings are good. Let's say February 5th, and it goes up to like 3,500. All right, well, if it's at, let's say 3,480. Okay, not even 3,500. We are up $21,000 on our Amazon call. 21,000. Now, we have an option here. We can sell this call and lock in $21,000, which would put us above, $100,000 in our account value. Or we can use this call and continue to write covered calls on it every single week and try to build up a lot of wealth from that. I personally think it's going to be a lot higher than that. I think we're going to have a little pre-anticipatory run-up. I think we're going to see about 3,300, and then after earnings, I'm expecting about 3,600, especially if we do stock split. Based on these factors, a 10% gain gets us 3,400. Okay, 10% gets us 3,400. I think we're going to see more of that between the run-up and then the earnings beat and the potential stock split. I could see a 20%, 25% increase. We also look at the analyst. The average analyst is about 3,875 right now, with the highest on the street being at 4,500. Now, I don't know if it's going to hit 4,500 anytime soon. I think it's going to be a while, potentially a year down. But, even if it goes down, next year is at 3,500 or 4,500. I'm up $91,000 on that rather than being up, not as much on just the share equity that I have. So it's obviously a very risky play because I'm betting half of my account on one call. So obviously I had to think about this a lot because, it's very stressful, as you guys know. I'm making a huge bet on something that could potentially go wrong and I could lose half of my account. But I figured the fact that I can sell covered calls on this and hedge myself basically and get some premium from that every single week. And the fact that as if these earnings are good and the stock explodes on shares, I'm going to obviously be safer because I can hold that forever. But I have an entire year. The stock hasn't done anything in 7 months and it has continued to improve and improve. And obviously some political issues happened recently and drives the stock price down. But overall, this is an amazing company. This is an amazing stock. And I think it's been sitting and it's ready to run. Like I said, literally 7 months ago, it just sits and hasn't done anything. Sits in that channel and loses a little bit. And that is why it's a perfect time to get in. You don't want to jump in a stock that's already exploded. You want to find a good company that continues to grow and grow and grow and is waiting for a pop. You don't want to get in after the pop. You want to get in before the pop. I think this is a great opportunity. We actually saw it break under 3,100 today at one point, which I was a little nervous about because I was down about $1,000 on this call. I got it at a terrible price, unfortunately. But because of that, had I gotten it down here at, 30.89, I would have been up thousands of dollars on this call. But, we did our best and we got it at about 31.12, like right about here. So we sold our shares at 31.17 right here at 10 a.m. Got in at 31.12. We thought, all right, maybe this is good. It continued to go down and down more. And then I didn't even see this part. I was at practice all morning. I got back and I saw like 31.16. So I was like, all right, not bad. But obviously they finished off the day at 31.20. So not bad. I'm expecting this to run, guys. This is the biggest bet I've ever made in my entire life. And I'm expecting it to pay off well. Let me know what you guys think about this. And I'll talk to you guys next video. Have a wonderful day, guys. Bye.